What's up, everybody? Welcome to another edition of Dave's Daily Dives, where me, Dave, I dig into the stock charts of the day, take a look at the major macro levels, rather, major market indexes. In this case, today, I'm going to take a look at the S&P 500 and the NASDAQ Composite. Also, check in on the Euro. Not going to leave you hanging there, though. I'm going to have 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. So especially in a market like this, you want to find these stocks. As Zacks Rank #1s, that means they've seen some earnings estimate revisions to the upside. So perhaps that will give them plenty of fuel to continue rallying higher. Okay, let's go ahead and get into this. First, by taking a look at the S&P 500. Now, those of you who have seen me before know that I have my fib levels that I draw in here. And in this case, after this fib broke, I went with this fib. So I'm working from the June lows, late June lows, to the early August highs. Drew my fib, and in this case, drew a fib extension. So typically when you use these Fibonacci levels, you hear them in terms of retracements. So there's a move here, and then you have it start to pull back and retrace some of the moves. So as you can see here, came down to the 61.8, found a little resistance again at the 23.6, came down to the 76.4, and these numbers I'm throwing out, that's the percent retracement of this move, okay? Anywho, once you get through that, now you can draw extensions. So based on what this did here, how much further can it go up in the opposite direction? So as we've seen here recently, we've broken through the 38.2 and the 50% extension. Today we got through the 50% extension. Keep going higher. The 76.4 is at 25.55, and you can go higher still. So now with this resistance level touched, at least today, 25.55 is your next top side target. Should it reverse and start to come back down, then you can expect to see a little bit of support at 25.23, with a stronger support level being, I think you can just use this sort of psychological 2,500 level. If not, you can get back down to this previous high in that 24.90 range. So good things here on the S&P. Of course, a lot of that stemming from the tax reform plan, and that's why we're seeing this rally. Now I want to touch on the NASDAQ here a little bit too, because the tech-heavy NASDAQ typically is a higher beta sort of play. Now these guys, the NASDAQ, struggled a little bit. I mean, after being really just a runaway stock index, started to back and fill and chop here a little bit for a while, and really had a rough go at the beginning of August. Since then, it sort of chopped its way out of there, and now what we see is all-time highs again. But I wanted to give you a fib extension. So in this case, 66.01 is the next level of resistance here on the NASDAQ Composite. So not too far away, about 70 handles, a little over 1% away from where stocks traded at today. So all good things here happening in terms of risk on behavior in the market. Now, in terms of global risk on, risk off, typically you look at the dollar as if the dollar got stronger and the euro got weaker, this is actually risk off. However, I think this is a little bit different here, and the reason being is that the moves that we've been seeing in these currencies as of late, a lot of this has to do with the U.S. talking about tightening here into December, and some of the civil unrest that you're seeing specifically in Spain with the Catalan region basically on the verge of declaring independence. But what I wanted to point out here is not necessarily, each level here. You have these periods of sort of consolidation broken on through, strong trend here in the euro. Really, I mean, you could argue that the trend started in December, but I think some of this choppiness is a result of a retrace of this move. But anyway, no debating that there's a real strong trend that's developed here recently, in the last several months, really April. Here I have the 50-day moving average rather. So pretty significant level, and you can see that the euro is broken down below that level. The last time we were below that was in April. So expect to see a little bit of choppiness here in the euro, but what's going to be surprising, what we really need to look for here is how low can you go. So what I'm going to do here, draw some fibs, if I can do it without breaking myself. Okay, here we go. Draw some fibs of this move. You can do it from these December lows, and you'll see that the first step also happens to kind of coincide with these August lows, sort of this 116.80 range. So not too far off. This chart actually didn't update. We ticked a little bit higher on the euro today, but so this is what you got going on at 116.80, sort of the next level of support, and then below that the 114.25. Obviously, I think the 115 even level is going to provide plenty of support on the way down. So just something to keep an eye on here, as the dollar starting to reverse the trend from the first basically 9 months of the year where you had a lot of dollar weakness. Now we're starting to see the greenback flex its muscle a little bit. That's having an adverse effect on some commodity prices and also helping to force gold down a little bit. Saw gold down to I think 1271 here today. So now let's take a look at 5 Zacks Rank #1 strong buy stocks, which are breaking out to new highs. And the first of which I want to talk about is ALCOA, ticker AA. And this has been on one heck of a run. Also starting off a little later in the year. This is a pattern you guys should look for, is when you start to get this series of lower highs, even a series of lower lows, a downward trend channel really starts to get in there. And then when the stocks break through the top of that downward trend channel, this is where you should be buying. Don't wait for a retest of the high for it to get all the way back up here. Look at how much you would have missed out on. You're talking getting it at 33 versus getting in at 40 when it comes to ALCOA. So just something to keep an eye on for the future, okay? One of my favorite patterns to trade when these break out. Now, that and $1 get me on the bus, right? Given that the stock's already all the way up here at 48.31. But this is the thing. This is why I go over these in these videos. They are Zacks Rank #1 strong buy stocks. So that means that earnings estimates have continued to tick on up too. So that could be providing plenty of fuel for this fire to keep on going. It's just interesting to see ALCOA breaking out to new highs here. If you're going to peck at this, I think you can put your stop right around 44. Gives you about a 10% stop loss, but it's below the recent swing low in price action. And you got the hopes of chasing this breakout a little bit. So that's ALCOA, ticker AA. Then you've got Green Dot, ticker GDOT. And this is going to look pretty familiar. Look at how the stock has come down, tested the 50-day, and found a bid multiple times. Happened earlier on in the year, happened again in August, and here we go, off to the races again. This is a pattern that you'll see with Zacks Rank #1 strong buy stocks as they continue to sort of step up while the Zacks Rank stays strong and these earnings estimates continue to creep up. Really a slow and steady wins the race sort of deal. This is one of those stocks where you buy onto it. Doesn't really matter your timing. You don't have to be perfect with the timing. Just buy it. Give yourself some room because you got the fundamentals of the Zacks Rank behind you. You can just go ahead and let it go. But if you were looking for a stop loss, my friends, you see this big spike after earnings and then this swing low here. I think you can throw some money at this and park yourself down here. Now, granted, this is a little bit longer of a period of time. I mean, a little bit further range. Not a lot of people want to mess around with that, right? Because you're talking, a little over, 13%, something like that, on a stock like this. You may not want to have that much of a cushion, but some of you do have a little greater risk tolerance. My suggestion is, if you're looking at a stock like this and you're more comfortable with like a 10% stop loss, just drop your position size so that the nominal potential, stop out is the same amount that you would have with a different stock and a tighter stop loss. That's how I suggest playing this. And again, Zacks Rank #1 strong buy, breaking out to new highs. Just kind of hold on for dear life and hope that this thing keeps on chugging along. That's Green Dot, ticker GDOT. Now something that you don't see every day, Malibu Boats, ticker MBUU. All about the MAGA trade, right? It's about this tax reform and the hopes the hope is that this tax reform comes in, middle class has a lot of money, interest rates are still very low, that could benefit all sorts of things from recreational sales and boats and RVs and everything. Note this spike up, this intraday spike up in June. So just draw that level across. That's essentially 30 bucks. So here's another scenario where you can just place a stop loss down here under 30. Go ahead and chase this one in the hopes that this trade continues. And if you see here, this sort of vaulting off of that $27 level and pushing higher, that's going to look very similar in timing-wise to how the Russell has been getting down to business. So same story here. Definitely domestic stock, something you want to look at. Malibu Boats, ticker MBUU. Then I've got Progress Software, ticker PRGS, another tech name here. And you got to look back to December when that high was getting put in. Then the stock sold off. Real long, sort of choppy consolidation period. Finally fought its way above that. But here's something I want to point out. I've got my vertical histogram of volume and price. That tells me where a lot of the action has been in the stock. And if you see here, sort of this 37.50 level has really been where the action has been there. So this is a story where you can get a little bit of a tighter stop loss. I would go under this swing low on this intraday candle. So that puts you just around 36.5, something like that, on a stock that's been breaking on through. And I would fully expect there to be support should it come back down to this sort of volume node, this high volume node, or in the next few weeks. So you don't want to jump on now. Wait for it to retrace to that. May give you another chance, but in a market like this, it's been tough. You've been rewarded by chasing though, and that's Progress Software, PRGS. It's been. I want to clarify that the market's been. It's been tough to not. If you haven't chased stocks, then you haven't been doing well, because you're getting rewarded for the chase here. Specifically, if you're in the small caps or anything domestically inclined. Sun Hydraulics here, manufacturing company. Remember this pattern I was telling you in the previous chart. These lower sort of descending highs. When it starts to break that, that's when you go. And this would have actually been perfect because it broke it as it broke the 50-day moving average. So that was a double win there. Note how it kind of stalls out, comes down and consolidates into June before really taking off again. And this thing is on the move, make no question about it. Should you chase this runaway? It's been pretty good, right? Solid growth, and it seems like every day it just ticks a little bit higher, following what I'm guessing is an earnings report on this gap up, a little bit of a retrace, and then she's off to the races. So definitely another sort of Trump trade, a tax plan trade, something you might want to take a look at. Sun Hydraulics, ticker SNHY. Okay, guys, that's all I got for you here today. Be sure to follow me on Twitter at Bartosiastics. Of course, you can see everything I do here on Zacks.com as the editor of the Momentum Trader as well as the Home Run Investor. So thanks for checking in with me here on Dave's Daily Dive. I will see you all later in the week. Have a good one.